Okay, a moment, if it's on the screen. I hope now my screen is clear. Can we confirm so that we begin? Okay, thank you, Kennedy, for the confirmation. So we can begin. So I'll start by introducing myself. My name is Mernditi, part of LWK Africa. So today I'm the one leading the webinar. So on the taxation in the construction industry, we are going to check on the tax compliance, the type of taxes, the tax saving strategies, ETMS, tax audit, tax dispute and resolutions, and the emerging issues in tax. So in case of any question, kindly type in the chat box, and my colleague is going to respond to you as we proceed. So when we talk about the tax compliance, we have some guidelines that are that should be guiding us on how to be tax compliant as a company or as a business in the industry. And the guidelines we have are as follows. So understanding your business tax obligations. So we have different tax obligations. We have the pay-as-you-earn, the VAT, turnover tax, depending on the nature of the business that you are involved in. So you should be understanding the obligations that you should be having, then make a point of registering on those obligations and file the returns on time. Then we have maintaining accurate records. Every transactions that you partake, make sure that you maintain those records in your businesses, be it the sales invoices, the purchases, petty cash vouchers, or any other record that you may be having, maintain them. Ensure timely and accurate filing of returns. So the different tax obligations that we have, they have different timelines. So like for the pay-as-you-earn, the deadline is on 9, the VAT is on 20th. So each and every obligation, ensure that you have you maintain proper timelines, file your returns on time, and do accurate filing to avoid any tax issues with the taxman. Explore legitimate tax planning strategies. So as we go on, we're going to check on those strategies. So as you carry on with your business, make sure that you understand different tax planning strategies so that you can be in the safe position when it comes to tax, and also to minimize the tax liability. Engage with tax professionals or consultants to ensure your business is fully compliant. You may be having your accountant in the business, or even the bookkeeper for those who have the small businesses that do not have accountants. But it's good to also engage a tax professional to ensure that you are in the right positions when it comes to the tax. You don't have any tax implications. So the tax professional will be guiding you on the taxes regarding your business. When it comes to the tax planning, the tax professional will be there to do that, and even to do a tax health check to ensure that you are in the right position. In case of any issues that you might be having, you can rectify them before the KRA comes to you. Then regularly checking the official communication from KRA to stay updated. So the taxes keep on changing, different rules come up, and even any other communication that may be concerning taxes, KRA usually communicates to every taxpayer through the registered email. So it's good that email that you registered with during the registration of your KRA PIN. Make sure that you be checking on it regularly to check on any communication from KRA. Also, if you don't have access to that email, make sure that you do a change so that you can have an email that you can regularly check on to see any communication from KRA. Respond promptly and accurately to KRA upon request of information. So like currently we have the tax audits that are ongoing. So KRA, in case of any intention to audit you, they will send an email to you. They'll send a letter with giving you a notice of that intention to audit you. So in case you receive that, you need to respond immediately and provide the required information. So what are the importance of being tax compliant? So once you are tax compliant, you have filed your taxes on time, you don't have any pending liability with KRA, so you are in a position to access capital. Even when it comes to financing from the bank or any other financial institution, they will request the financial statement and even the tax compliance. They want to certify that you are tax compliant. So without that tax compliant, it will be a challenge for you to access any financing or any capital. So it's good to ensure that you remain tax compliant at all times. File your returns on time, pay any pending liability to KRA so that you can get the tax compliance certificate. Also, you can be in a position to improve your business operations. It also enhances growth through tendering and mergers. When you are applying for tender, it is a must they request for the tax compliance certificate. So if you're not compliant, even getting that tender is a challenge. Then we have operating with peace of mind. So you don't have any issue like you suspect KRA can come to you at any time. When you are tax compliant, you don't have any thought of KRA coming to you. So you just have you are operating with a peace of mind, no any distractions, without a lot of KRA coming to you. So it will enable you to do well in your business. So basically, those are the guidelines for being tax compliant and the importance. So we can explore the different taxes in the construction industry. So we have the pay-as-you-earn, corporation tax, VAT, withholding tax, excise tax, rental income tax, and capital gain tax. So we're going to tackle each at a time. So beginning with the pay-as-you-earn. So pay-as-you-earn, it's a tax levied on the employees on their salary. So every person who has employees is supposed to register for the pay-as-you-earn, even if you are operating a business which is not registered as a company. But in that business you have employees, you need to register the pay-as-you-earn obligation. So whose obligation is it to deduct the pay-as-you-earn from the salaries? So it's the employer who has that obligation. So as an employer, you need to register for the obligation, the payee obligation, then deduct the pay-as-you-earn taxes and remit to KRA on a monthly basis. So the pay-as-you-earn tax, it is computed on a graduated scale, and the minimum is 24,000. So any person earning from 0 to 24,000, there is no tax resulting from that, because that is the first scale the first bracket on that scale, and the tax is at 10%. But then there is a relief for 100, so it will offset. So that's why we say any person earning below 24,000, there is no tax to pay. But it's good to include everyone in the pay-as-you-earn. Even those earning as low as 15,000, ensure there is in the pay-as-you, they are there as you file.
It's good to add. So
Kindly let's
also
meet
earning
our
below
life.
24,000 for payroll, even those earning even as little as 15,000. Not on earn 5,000.
Let's meet our make and be in this in one meeting.
3,000.
So we can proceed. So I was saying that anyone earning between 0 to 24, there is no tax resulting from that, but it's good to include them in the pay-as-you-earn, because at the end of the year, you'll be in a position to claim that the entire expenditure that you incurred under the salary and wages. There are penalties for non-compliance. So for the pay-as-you-earn, you're supposed to file on or before 9th of the following month. So like now we are
login na AI.
So
take notes.
For the pay-as-you-earn for July, you should file that by August 9th. So between 1st to 9th August, you're supposed to have filed that pay-as-you-earn for July. So failure to do that, that is to comply with that deadline, there is a penalty for 10,000. And also we have a penalty for not making the payments within the 9th. So by 9th, you should have filed the returns and remitted the taxes. So there is a personal relief of 28,800 per annum or 2,400 per month that is associated with the pay-as-you-earn. So each resident person has that relief to consume the 2,400, and it will be used to reduce the tax liability. Then we can move to the VAT. So the VAT is the value-added tax. It is a tax charge on the supply of taxable goods and services. Those goods that are made in Kenya or even imported to Kenya, they are subjected to that tax as long as they are taxable. And even the services that you receive from a resident person in Kenya or even an unresident, we have imported services, they are subjected to the VAT tax. The rate of VAT, we have 3 different rates. We have the standard rate, that is 16%, or the general rated. I believe this is common to all of us. Then we have the zero rated, that is 0%. So the goods and services under that category, they are subjected to tax, but at 0%. So at the end of the day, there is no tax you're going to pay, but they were subjected to tax at 0%. Then we have the exempt. So the exempt category, they are completely they are completely not subjected to tax. So at the end of the day, there's related and the exempt, there is no tax to pay. But the difference is, for the exempt, there is no tax charge on them. When there's related, they are charged tax at 0%. So that's the difference between the two. So for the VAT, the timelines for filing is 20th on or before 20th of the following month. So currently we are in date 18th. So we are working on the VAT for the month of June. So by 20th, you're supposed to have filed. And failure to comply, there's a penalty. There is 10,000 penalty for late filing and also for late payments. So maybe you filed the returns on time by date 5, but the resultant tax you have not submitted KRA. So there is a penalty and an interest on that tax. Still on the withholding, on the VAT, we have the withholding VAT. This is where KRA will appoint agents to withhold tax. The withholding tax is on 2% for the VAT. And for you to withhold, you need to be appointed by KRA as an agent. So you have bought goods from your supplier worth 100,000. So you're supposed to withhold 2% and pay the supplier the remaining amount. Then the 2% you remit to KRA. And as the suppliers, you need to ensure that the person who is withholding is an appointed agent, because someone will come to you and claim to be an agent, but they are not. So it's good to know that they should be agents. Once KRA appoints you, there is a communication. They will send a letter to you as an agent. And they're supposed to start withholding immediately upon appointment. We have the corporation tax. So corporation tax, it's a tax levied on the companies or even businesses on their annual income. So at the end of the year, you have earned the income. You need to declare that, and corporation tax is that. So the rate is 30%, and I believe all of us, we did the filings by 30th June. So that's the tax that you are dealing with, the corporation tax. And for the businesses, it was the income tax resident for individuals, those that are operating under sole proprietors. So it should be filed by 6th month after the end of the company financial year. So different companies or businesses, they have different end year, but majority the end year is on December. So from December, you have 6 months to ensure that you have filed the returns. This is the point where you engage your auditors. They come and audit and verify the financial statements. Then you submit the returns to KRA. That's why we normally say the deadline is on June 30th, because we are counting 6 months from December. But in case your company year end maybe falls at June, because we have companies that their year end is on June, so probably your company year end was on June 2025. So you have up to December, that is 6 months from the year end, to make sure that you have engaged the auditors, they have reviewed your books, and they have the tax have been filed within the 6 months to avoid the penalty. I believe we are still together, and in case of questions, you are asking them in the chat box. So we continue asking questions so that we can have a better understanding and not to be left behind. So the other tax is the capital gain tax. So the CGT tax, I tax on the transfer of properties. So in case you are doing a transfer of property, you are selling land, you need to pay that tax, the CGT. It is declared and paid by the transfer of the property. So the seller is the person who is supposed to pay this tax. So, and for the property, we have even buildings and land, not just the land. And the rate of tax is 15% of the net gain. So by net gain, this is whereby you have the price, the selling price. Then you deduct any other cost that you have incurred in the process, you get the net gain. So the net gain, that's what you are supposed to charge 15%. So CGT is a final tax. By final tax, we mean that once you have paid that 15%, at the end of the year, you're not supposed to subject that income on any other tax. In case you have any other business income, you will declare that. But if your business does not have any other income, the only income that was there is the one that was subjected on the CGT. So at the end of the year, you're supposed to file a nil return. So that's what we mean by final tax. So net gain, it is the sales proceed minus the acquisition and incidental cost. So we are going to see some of the incidental costs that you deduct when computing the CGT. So the expenses that are allowable, part of that, whatever we are calling the incidental cost, we have the cost of acquisition or the construction. So you bought that land at 10 million and you have sold at 15. So the selling price, that 15, you need to deduct the buying price. Or if it's a property that maybe a building that you bought, you deduct the buying price. Then we have loan or mortgage interest. So you also need to consider that. Cost of advertising to find a buyer. Cost incurred in valuation of the property, because at the point of selling, you need to engage a valuer to determine the value of that property. So that cost that you have incurred, make sure that it is also deducted. Then you have legal fees and any cost of enhancement or any improvement that you have done on that property. So you need to deduct them so that you can compute the 15% on the balance, the net gain. We have situations whereby capital tax is not applicable, so it's exempted. Number one, income that is taxed elsewhere, as in case of property dealers. So for the property dealers, the income that they get, they declare that and it is subjected to 30%. So that income is not subject to CGT. Issuance by a company of its own shares and debentures. Transfer of property for the purpose only of securing a debt or a loan. So when you go to a financing institution, you want to acquire a loan and you give them your property. So that transfer is not subjected to capital gain tax. Transfer by a creditor for the purpose only of returning property used as a security for a debt or a loan. So you issued your title deed as a security. So after you have paid the loan, once you're getting that property back, that transfer is also not subjected to CGT. Transfer by a personal representative of any property to a person as beneficiary in the course of administration of estate of a deceased person. So in case there is a deceased person and there is that estate that was left behind, so the person who is a beneficiary, that transfer is also exempted from CGT. Transfer of asset between spouses. So your husband or your wife has a property and they are transferring to you. So also that one is exempted. Transfer of assets between former spouse as part of divorce settlement. So in case during a divorce and one party transfers the property to the other, yeah, CGT is not subjected there in that case. Also transfer of assets to immediate family. That is, it's part of inheritance. It's also not subjected to CGT. You transfer a property where a company, where spouses or a spouse or immediate family hold 100% of shareholding. That one is also exempted. A private residence, if the individual owner has occupied the residence continuously for the 3-year period immediately prior to the transfer concerned. So if the person occupying has occupied it for the 3 years, you should not subject the CGT. But if that's not the case, it should be subjected. So we need to take to be keen on these circumstances so that we can be on the safe side. Don't just assume it shouldn't be subjected to capital gain tax and you fail to pay, then KRA will come to you later demanding the tax. So take note, whenever you do that transfer of property, evaluate that situation or that circumstance involving that transaction. If you qualify for the CGT, make sure that you pay the 15%. The other tax, we have the withholding tax. So at the point we are discussing the VAT, we talked on the VAT withholding. So we also have other withholding taxes, like the On the consultancy services, the tax is at 5%. We have contractual 3%. So the different categories of transactions, make sure if there is a tax that is that should be paid, it should be done. Like for the consultancy, it should be 5%, contractual 3%. So for the withholding tax, it is tax deducted at source. E.g. for the professional services, you have engaged your auditor, that's a professional service. They have charged you 50,000. So for the professional services, we say any amount above 24,000 in a month, it should be subjected to 5% withholding tax. So before you make payment to the service provider, make sure that you have withheld 5% and remitted to KRA. We also have other professional services like legal fees, even training is subjected to that. For the construction, we have the contractor. You have engaged a contractor. Make sure you withhold 3% before you pay them and remit that to KRA. Then we have the rental income tax. So the rental income tax, it is charged at 7.5 from January 2024. Initially, it was 10% on the gross rent received. So this is the monthly rental tax that we do on a monthly basis. For the residential, the tax is 7.5. Any income that you receive from the residential property, make sure you subject that to the rental income tax at 7.5 and remit to KRA. And there are no expenses that are deducted there. If the income you have received is 1 million from the properties that you have for the residential property, so 7.5 of that is subjected to KRA. Also to note on the rental income, if the income you are receiving per year is above 15 million, you are exempted from doing the monthly rental income tax. So you're supposed to declare that at the end of the year. And at that point, you have the opportunity to claim the expenditures that were incurred. Then the profit is subjected at 30% for the company. In case it's a business operating under sole proprietor, the tax will be subjected using the graduated scale. So it's a good point to note. If the income you are receiving from the rentals, it's above 15 million, you can take that opportunity to declare it at the end of the year and subject the profit at 30%, because you have a chance of claiming the expenditures that you incurred, like the repairs, garbage collection, any expenditure regarding to that rental income, you can claim that. So it's good to take note of that. So if you don't reach that threshold, make sure you pay the monthly rental income tax at 7.5 per month. Also, the rental income, it's a final tax. Once you do that at the end of the month, the 7.5, at the end of the year, if you don't have any other business income, you're going to file a nil return. But if you have business income apart from the rental, you need to declare the business income. But for the rental bit, that one is a final tax, and no any other tax should be paid apart from the monthly rental income that you pay. Then we have the excise tax. It is a tax imposed on goods and services manufactured in Kenya or imported into Kenya. So for the excise tax, we have like those dealing with water refilling. So they have the excise tax obligations. They need to do that on 20th. So if at all you have under the construction industry, you have another part business, like for the water refilling or anything else you're manufacturing, you need to do the excise tax by 20th of the following month. So the deadline is the same as the VAT. So we also have a penalty for the late payment or late filing, which is 5% for the late payment, and for the late filing is 10,000. So whichever is higher, that's the penalty you're supposed to pay. So to avoid all these penalties and interest, which are costly to our businesses, we need to observe the timelines. Each and every obligation have a different timelines. make sure that we observe that and do the returns on time. We also have import duty. So for the import duty in the construction industry, maybe you can import an equipment into Kenya. So during that importation of that equipment or even materials, you're supposed to pay the import duty. And the rate of the import duty will depend on whatever product you are importing into the country. Then we have local authority levies. Those are the levies that we pay locally. We have the inspection fee, building permits, development levies. So I believe in our industry, those are levies we have been paying to the local authorities. The other one is turnover tax. For the turnover, it's applicable to small businesses. So if I can take back on the VAT, we have a threshold which is 5 million. If your income is 5 million or above, you need to register for the VAT obligation. But now when we come to the turnover tax, you have not reached the 5 million. You are below the 5 million threshold. It's either you register for the VAT voluntarily. If not, you should register for the turnover tax. So if your income is less than 5 million, you should have registered for turnover tax. So the turnover tax, the rate is at 3% of the gross sale. And also this one, you do not deduct any expenditure or even purchases. Just the income, the gross sale that you have received, you subject that to 3% and remit to KRA. So it's good to even do an evaluation. If you have not reached the 5 million threshold for the VAT obligation, if you pay the 3% of your gross sales, which one is safer between paying the 3% of the sales or registering for the VAT voluntarily? Because you see, for the VAT, you have a chance to claim the expenditure of the purchases that you have bought. But for the turnover, it's purely on the gross sales. So those of us who do not have the VAT obligations, make a point of registering for the turnover tax. So we have covered the major taxes in the construction industry. So we also have some of the statutory deductions, which are part of our taxes. So we have the NSSF. So I believe we have registered for the NSSF as a company. So for the NSSF, you're supposed to deduct NSSF contribution from your employees when filing the pay-as-you-earn. I believe those of us who have been filing the pay-as-you-earn, there is a portion whereby we include the NSSF contributions. So make a point, if you have the pay-as-you-earn obligation but you have not registered for the NSSF, it's your responsibility as the employer to have that NSSF and deduct the employees and remit that to the authority. So for the NSSF, currently we have the lower limit is 8,000. So anyone earning 8,000, there is that NSSF that is being deducted, which is 6%. So 6% on the employee, and the employer will contribute the same for you. So at the end of the day, 12% is being contributed in your account for the NSSF. So the employer contributes 6% and the employee is deducted 6%. Then we have the upper limit, which is 72,000. So initially, the upper limit was 36. So 6% of 36, that was the upper limit. So anyone earning 36,000 and above, the contribution was the same. But as per the year 2025, we are in the third phase of the NSSF implementation, and the upper limit increased to 72,000. So that is double contribution. So I believe those of us who are in employment and are being deducted the NSSF, we have seen that impact. Initially, you are being deducted 6% of the 36. I think it was coming, the deduction was coming to 2160. But currently, with the upper limit being 72,000, the contribution is 4320, which is double. So employees with gross earning at over 372 will contribute 4320, and the employer will match the same. So from 72,000 and above, the contribution is 4320 from the employee. Then the employer will also contribute the same to you. The deadline for the NSSF is 9th of the following month. So for July, we'll do that by 9th of August. So from 1st to 9th, make sure that you have limited the NSSF. We have the penalty for late payment, which is 5% of the total contribution. If you have deducted the NSSF for all your employees and you're getting the contribution to be 30, then you have not 30,000 and you have not paid by 9. So 5% of that contribution is a penalty. Then we have the other statutory, which is SHIF. So SHIF is the new insurance, health insurance, which came to replace NHIF from October 2024. So I believe we are all contributing to the SHIF. And also it's the responsibility of the employer to deduct the employees, the SHIF contribution, and remit that to the authority. So every employee is required to contribute 2.75% of their gross income. So if we are receiving 30,000, 2.75% should be going to SHIF. And even those who are not employed, make a point of contributing to the SHIF. Also to note, there is no tax relief available for SHIF contributions. So initially, there was the 15% relief on the SHIF. So if you are contributing 800, so you are getting 15% that as your relief. But currently, the relief was done away with. So there is no relief for the SHIF contribution. But now it's an allowable deduction. The same way we were treating NSSF as an allowable deduction, so the same will apply to SHIF. Your basic salary is 30,000. So you're supposed to deduct the NSSF contribution, that is 6% of 30, and also 2.75, which is the SHIF, so that you can reach to the taxable income. So take note of that. And for those of us who are not registered for SHIF, you should register and be deducting the employees and remit to the authority. Then we have the housing levy. This one is a mandatory contribution for everyone who is earning. So the rate for the housing levy is 1.5 of the monthly income. That is 1.5 from the employee salary, then the employer to contribute 1.5%. So every month you are receiving 3% of your income in that fund, the housing levy. So the housing levy is filed together with the pay-as-you-earn, and the deadline is on 9th. So those with the pay obligation, I believe you have encountered this. When filing, there is a section whereby you fill in the housing levy details. You need to fill in the particulars of the employees, the name, the ID numbers, and their KRA PIN, then the gross income, and you get the housing levy to be paid. So we have a penalty for late payment, which is 2% of the unpaid amount. So after you have filed the returns, the pay-as-you-earn, make sure that you generate even the payment slip for housing levy and pay the same to avoid the 2% penalty. So KRA is just a collecting agent, but the money is going directly to the housing levy fund. That's why it's been done together with pay-as-you-earn and the KRA portal. And what do we mean by the gross monthly salary? This is whereby we have the basic salary and the regular allowances that you receive. You're receiving transport allowances, house allowance. So those regular allowances that you are receiving, they should be consolidated together with the basic salary to come up with the housing levy contribution for that month. So those are the taxes and the statutories under the construction industry. Now we can come to the tax saving strategies. So every obligation that we also have the saving strategies that will enable the taxpayer to reduce the tax liability of the tax burden. So for the VAT, we have the early registration of VAT obligation. So in the construction industry, at the point that you're starting the construction of a property, which the income that will be generated from that property is subjected to VAT. You need to register the VAT. You are acquiring a lot of materials, so that those purchases, you need to claim input tax on them. So you should be having the VAT obligation and start claiming the purchases. So that's the point where you come to declare the income after you have finalized the construction and you have tenants. Now you are receiving income that you need to declare and will be subjected to 16%. So you already have tax credit from the purchases that you have been claiming. So make a point of registering for the obligation as you start construction. And the other strategy, if you have the VAT obligation, make sure that you buy goods from other registered entities. This will enable you to claim the input tax on those purchases. Then you plan on your purchases. As we progress with our daily activities, make sure you have a good analysis of the income that you have and the purchases. If the income is too high, it will lead to a higher tax to pay, the output tax. So you also need purchases to offset that tax. So you have done your analysis and you have seen that you have a tax liability of 200,000 and you are very sure you cannot be in a position to afford the 200. So you need even to get more purchases, even if it's on credit basis, so that you can have input tax to claim and reduce the tax liability. So you can also buy on credit. So at that point where you're planning your purchases so that you can reduce the tax liability, if you don't have funds to buy more goods, you can also buy on credit, because anything that you have bought, you'll be in a position to claim the purchase. Then we have the VAT refunds claim. So we have, you should apply to KRA for a refund if you are eligible. We have different scenarios whereby the VAT refund is applicable. Maybe you have bad debts and you have tried recovering that debt from your customers, but you have not yet received it, and you already paid tax on that transaction. You should apply for refund of that tax amount from KRA. Also, you have taxes that you have paid in error. Maybe you paid excess of VAT in error. You need to apply for a refund. So if you are eligible for a refund claim, make sure that you apply. Then you have proper record keeping. It will enable you also to reduce the tax burden. Buying from ETMS compliant suppliers and giving your KRA PIN. So currently the VAT is being done through auto-population. So all the data, all the transactions are already captured to the KRA. So at every point that you're making a purchase, make sure that you give out your PIN so that the purchase can be captured. Then we come to the income tax or the corporation tax. So the saving strategies, we have one, interest expense on a loan. So you have a loan, make sure that you claim that interest that you have incurred on that loan. It will help to reduce the profitability, also reducing the tax. So if you also have bad debts, which are more than 2 years, make sure that you can also claim them. But at this point for the debts, you have to demonstrate that you tried recovering the debt, but there was no success. So have a file, maintain all those, even if it's communication, if you have engaged a lawyer, all those support documents to show that you tried recovering this debt to no success. So you can also claim that bad debts. Capital allowances. So we have different machineries and equipment. So we can claim a capital allowance on different type of the machinery or the equipment that we have. That capital allowance will also reduce the taxable profit, thus reducing the tax to pay. So make sure if you have the machineries, the equipment, software, or even you have done any investment, you have a building that you have constructed for the commercial purposes, make sure that you claim the capital allowance on those assets. When you come to the pay as you earn, we have some strategies. Number one, you take insurance cover. So we have said for sheep, there is no relief, but if you have any other insurance cover, life or health insurance cover, so there is a relief of 15% on every premium paid. So each contribution you are making on a monthly basis, 15% is a relief granted to a taxpayer to a maximum of 60 per year, 60,000 or 5,000 per month. So if your contribution is 10,000 per month, so 15% of that is a relief, and it will assist in reducing the pay-as-you-earn tax. Then take a mortgage instead of a loan. So for the mortgage, the interest that you pay, it's also, we have a relief on that. It's not allowable to a maximum of 30,000. So if you are paying an interest of 50,000 per month, for example, 30,000 is not taxable. So the only point that will be taxable, it will be just 20,000 alone. So register with the retirement benefit scheme. So for the contributions made to the retirement benefit scheme, we have a limit that is not taxable. That is 30,000 per month or 60,000 per year. So that contribution you are making, 30,000 of it is not taxable. So it will be used to reduce the taxable income that you have, thus reducing the tax to pay. Contribute to a registered home ownership saving plan. So for the home ownership saving plan, we have a relief of 8,000 per month. So these contributions, that once you register and do that contribution, it will be used to reduce the pay tax that you have at the end of the month. The other one is getting a disability relief. For the disabled employees that you have, they should be registered with the authority. And through that registration, there is vetting to be done to confirm they are fully registered and they are disabled. So once they qualify for that registration, there is a relief. Their income from 0 to 150 is not subjected to pay-as-you-earn tax. So if you have those employees in our business, in our companies, encourage them to register that so that they can get that relief. So those are the tax strategies. So the other items, we move to the ETMS. I believe by now, if not all of us, most of us, we have already onboarded on ETMS, and it is a requirement for everyone, for every business, every company to onboard on ETMS. Either you were VAT registered or not, whether you are dealing with taxable goods or not, you need to onboard on ETMS. So ETMS, it is an electronic tax invoicing system. So it's a software whereby you invoice your customers, and that transaction is transmitted to KRA on a real-time basis. That's why we are now using the auto-populated. So through the ETMS, once you make that transaction, that data is transmitted to KRA, and you can get that data there for the sales and the purchases. So everybody needs to onboard on ETMS. So who is required to onboard on ETMS? So every person carrying out business in Kenya, whether you are VAT registered or not, you need to onboard on ETMS. But we have different exemptions for the ETMS registration, or those that are not subjected to ETMS. We have emoluments, salary and wages. Those ones they are not subjected to ETMS. Imports, there is no ETMS on import. Investment allowances, the capital allowances, we have talked on that. on the equipment and the machineries that you have, that investment allowance is exempted from meetings. Then interest, the loan interest, it's also exempted. Air passenger ticketing. So any other apart from this, it should be on meetings. So, and every expenditure that you claim in your business or your company, it needs to be supported with an ETMS invoice. So still under ETMS, we have different solutions that you can use. For those of us who have not onboarded, so you can take chance and evaluate the most appropriate solution which can be fit for your business. So we have ETMS, right? So this one is through eCitizen. So if you're dealing with a business that have very minimal transactions, you can just use your eCitizen to register for ETMS and issue the tax invoices using that. Then we have the ETMS, right? The USSD. You can access that through *222# and you can be able to issue an invoice to your customer. And that one is majorly, it's appropriate for the sole proprietors or individuals. We have ETMS client. This is applicable for a taxpayer dealing with both goods and services. So for the ETMS client, you're going to get a machine once you register. So if you're dealing with your goods and services, both goods and services, that one is applicable. We have ETMS online. Also for the ETMS online, it's still applicable for goods and services, but majorly for the service, this is favorable. So you just search online and follow the procedure to register. So you'll just be logging in your portal and be able to issue an invoice to your customers. Then we have the virtual sales control unit. So under the virtual sales control unit, there is a system-to-system integration. So you have an ERP system in your company, so it needs to be integrated with ETMS so that you can be able to invoice and generate an ETMS compliant invoice. We have online sales control unit. So in this case, for the online sale control unit, it also concerns the system-to-system integration. But in this case, the invoicing that you're doing, you're using the online invoicing system. So whichever solution that favors your business, if you have not onboarded, you can consider onboarding because it's mandatory for every taxpayer to be onboarded on ETMS. We have some improvement, or maybe we can call them the emerging issues that came up from ETMS. You can do the self-onboarding. So for the self-onboarding, you don't need to go to KRA for you to be onboarded on ETMS. So you can do that on your own. Then we have taxpayers can use different ETMS simultaneously to generate the invoice. So the different solutions that you have checked on, you can be having an ETMS site and ETMS client at the same time. It's applicable to have the two. So, and for this, whereby you have different ETMS solution, you can be able to generate invoices from both of them. And each solution will follow a different sequence. So you'll find that maybe from the ETMS web, the invoice pattern will be different for the ETMS online, but the particulars will be the same for the company. The company details will be the same. Also for that, on the different solutions, once you issue a credit note, you can only generate that from the solution where the original invoice was raised. So you have two different solutions. So at the point where you are raising a credit note, make sure that the solution you are using, that's where you got the original invoice. The third improvement is on the reverse invoicing. This is whereby, as a buyer, you can be able to generate an invoice instead of the seller, because we have those people, probably the farmers, they don't have the ETMS, but you have bought goods from them and you need the invoice. So at this point, you can do a reverse invoicing, generate an invoice as a buyer to support that transaction. That's a sample of an electronic tax invoice. And also we have an ETMS sample invoice. So you should be getting, once you do a transaction, you purchase your goods, you should be getting such an invoice or this one. And they have all the particulars of that transaction. We have the name of the supplier, the name of the purchaser, the description of the items or of the goods or the services that you are receiving, the invoice number. We have a QR code, the taxable amount, the tax, and the gross amount. So that one is a valid ETMS invoice. So that's all for the ETMS. So we check on the tax audit in the construction industry. So for the tax audit, these are the audits from KRA. So what do they entail? So whenever we talk about tax audit from KRA, what are we talking about? So number one, we have documentation review. KRA will send you a letter. They want to review the documentation. You have filed the returns. They want to review the income statements that you have submitted to them, the balance sheet. So they want invoices to support those transactions that you have declared. So make sure that you maintain proper documents for each and every transaction. As far as 5 years or 6 years back, all those documentation should be maintained. Then we have income verification. This is where they want to verify whether the income that you have declared is what you earn from the construction activities. At this point, they will analyze even the bank statement, they want the ledgers for the purpose of determining the turnover or the income that you declared in your returns. Is it the actual income that you earn from the construction activities? We have expense verification. So all those expenses that you have claimed, there was transport, salary and wages, office expenses, stationery. They want to see the support document. They want to see valid invoices. And even those transactions that do not have invoices, how about the petty cash vouchers? How have you maintained them? So every expense that you have claimed, it should be supported with a valid tax invoice. For the salary and wages, you should be having the payroll. For the casuals, have the payment schedule, the wages schedule, and the recipient of the wages, they should have signed those schedules. So make sure that you maintain every support document for every expense that you claim. Then we have VAT compliance. So they will check whether you have computed correctly the VAT and whether you have paid that amount. Those supplies that you have, the sales that you have declared and the purchases that you have claimed, are they relating to the construction project that you have? Because we know that you can just go and make a purchase not relating to the business, but to give out the company name. So it will be auto-populated, but in real sense, that purchase, that transaction is not for the business purposes. So it's good to ensure that even when doing the VAT, those purchases that we are claiming or the vatable expenses, they relate to the company and that for the core business of that company. The other one, we have the transfer pricing. So this one will only apply when you have related party transactions. So how you are transacting between the related party, it's also a point of concern when it comes to KRA. They want to verify whether you are conducting those transactions at arm's length. So under the transfer pricing regulations, there are regulations that you need to comply to them when it comes to tax matters. So for every related party transaction, they will verify to see whether you are following the transfer pricing regulations. The other aspect is the compliance with tax laws and regulations. So we have different laws and regulations from KRA regarding the tax. So as a taxpayer, are you complying with that? Are you tax compliant? Do you have the right obligations for your business? Have you filed the right returns? Have you paid the taxes? So they want to see whether you are compliant. Then we have the record keeping. So that one we have also talked under the documentations. So they want to see whether there is accuracy record keeping in your company. So by this, they will just request for the support document of the returns that you have submitted to them. For the income, they want to see the sales invoices. For the purchases, they want to see the purchase invoice and the invoices for the expenditure together with the petty cash vouchers. So we need to maintain proper record keeping in our companies. Then we have payroll and withholding taxes. So we have claimed the salary and wages expense at the end of the year. For example, 5 million. Do you have the pay-as-you-earn obligation to support the? Because as I said, when we were tackling the pay-as-you-earn, each and every employer, as long as you are paying the salaries to employees, you need to be having the pay-as-you-earn obligation. So having that expenditure, the salary expenditure, they want to see why you don't have the pay obligation. Also, we find that we have some of the consultants that we have engaged, the contractors, majorly for the construction. So how have you done the withholding taxes? Remember we said for the contractors, you need to withhold 3%. So make sure that you have done the withholding because they will come and audit that. You have claimed that you have subcontractors fee worth 10 million, but there is no withholding that you have done. So that one is a trigger. Then we have capital allowances. That one we have talked on the machinery and equipment. They want to assess whether you have done the right computation for the capital allowances, whether in case of investment, the invoices supporting that investment, are they valid? Are they taxed? Are they supported with the tax invoice? So for the capital allowances that we claim, make sure that it is fully supported. So those are the different aspects of on the tax audit that KRA will focus on. So we can check on the triggers. What will trigger these audits? So we have the income tax and VAT return discrepancies. So for the VAT, we declare the income and the purchases. When we come to the end of the year, we find that the income that we have declared is not matching with whatever we have in the VAT or even the purchases. That discrepancy will trigger an audit. They want to verify the variance. Maybe income tax has higher sales than the VAT. So automatically there they want the variance to be subjected to VAT. So it's good to ensure at the end of the year, the income that you report, it should be coinciding with whatever you have in the VAT. Then we have rental income not declared despite having utility records. So we have electricity, water bills, which are higher, and even garbage collection, which will in a way show that there is a rental property somewhere. So using these records, mostly for the KPLC under the electricity, so that one will link to to having rentals. So they would want to audit to and determine, did you have any rental income and you never filed for the rental income tax? We also have nil filers. Also, we have staff cost or payroll expenses. So you don't have any income, but you have a payroll expense. You have salary and wages of 5 million, but the income is 0. Where did you get money to fund that? The salary and expenditure. So they would want to audit you to determine whether you have declared the right accounts for your company. Failure to remit VAT despite high import declaration. From the import record, they can see that you made imports, but at the same time, you don't have any VAT. So that one is also another trigger. Advanced tax, non-compliance. So for the advanced tax is the tax paid on the commercial motor vehicles, for the motor vehicle for the luggage carriage or passengers. So in your returns, under your asset, you have declared that you have motor vehicles worth 10 million. At the end of the day, they review and see that you have not paid any advance tax. So you're not compliant. So that one is also another trigger. So make sure if you have the motor vehicles, you should be paying the advance tax at the beginning of the year. Then we have sudden revenue drops not supported by economic condition. So probably for the last 5 years, your revenue has been dropping, and you cannot fully support that and say the economic we are in harsh economic times. So that drop will trigger an audit. Use of proxy data, that is the bank deposits, M-Pesa, and social media activity. So your company is there in the limelight, in the social media, but once they come to their records, you are declaring a nil return. So they would want to see how you have been performing and verify the actual performance and position of the company. So for the KRA audit, we have different accounting books that they will require. So once you get that data from KRA, they want to audit you. So these are the books that they will request from you. We have the sales ledger, purchase ledger, sales and purchase invoices. So whenever they ask for this ledger, they would want to see even the physical invoices, the general ledger, the asset register to support the assets that you have declared you own, M-Pesa and bank statement to verify the income that you have received, you have declared. Is it the same income that you have received in the bank or M-Pesa statement? Debtors and creditors account. So you have declared you are having debtors worth 10 million or payables worth 10 million. They want to verify from the account, the original account, is that the actual position of the company regarding the debtors and the creditors. Then the salary and wages record. So I said you always maintain that even for the cash flow wages, make sure that you have maintained all the wages schedules and they have been signed by the recipient of the wages. Then the director's account, the loan statement. Remember we said under the loan that you need to reduce or to save on tax, you should claim the interest expense. So you have an interest expense of 5 million, but under the balance sheet, you don't have a loan balance. So they would want to see loan statement to verify the loan balance and also the interest that you have claimed. Also the inventory accounts. So we also report the inventory balances at the end of the accounting period. So they want to verify whether that's the actual inventory that you had in the business, because for the inventory, it will also affect the sales that you have reported. So make sure that the inventory that you report at the end of the year, it's very accurate and it can be supported. So we can take on the mistakes that we make as entrepreneurs in the construction industries. And this mistake will be very costly because they will affect, we have the tax implication that will result from all these mistakes and they will affect the company. So number one, we have lack of proper record keeping. So record keeping is key. For you to be tax compliant and to be on the safe side with KRA, you need to have proper record keeping. So failure to maintain proper record keeping, that is number one mistake, because whenever you are requested to support anything that you have declared, once you fail to support the purchases, the expenditures, they will disallow that, and that will lead to a higher tax to pay. Mixing business expenses with personal expenses. So always take note that those expenses that we claim for our businesses, they should be for the purpose of that business. So any expenditure that is for personal, maybe for the director or even the accountant, you incurred something and you mix that record with the company's record. So it should not be claimed under the company's account. So anything that's not part of the core purpose of that business should be excluded. Errors in tax calculation. So it's good to engage a tax expert to be doing your tax computation to avoid those errors that will lead to maybe higher tax liability or even reducing your tax liability, but in the wrong way. So at the end, during an audit, you think that you have a higher tax liability. Trusting incompetent third parties to handle your tax matters. So we say that we need to engage tax professionals to handle our tax matters. Erroneous tax obligations. Mostly we find that we have rental income obligation, but we don't have any rental property. So it was registered erroneously during the registration of your KRA PIN. You're not even aware, so you have not been limiting the taxes even for a nil return. So at the end of the day, you have a higher penalty and interest to pay to KRA. So ensure that you scrutinize your KRA portal and see the obligations that you have. Are they valid? Is there an obligation that you need to do a cancellation? So ensure that all the obligations that you have are very valid for your company. Failure to register for tax obligations. We have the different tax obligations that we have talked about. But the ones that we need to register, we have the payee, the VAT, and the rental. So if you are dealing with vatable goods or taxable goods and you have reached the threshold, we talked about the VAT threshold to be 5 million. So you need to register the VAT obligation. Then we have the payee obligation. You have employees that are paying salaries and wages at the end of the year or at the end of the month. Make sure that you register for the payee obligation. Lack of a tax function in our organization. So we can be having a tax department, but they don't have the right capacity to handle the taxes for the company. They are not competent enough. So this one will cost you as a company. Failure to plan. So for you to be tax compliant, you need to be regularly doing tax planning so that you can be on the safe side with KRA. So failure to do proper tax planning will get you into the bad side of the tax man. Observing time deadlines. So we have talked about different deadlines for every obligation. So failure to observe that, we talked about penalties. And penalty is an additional cost to the company, which was not even budgeted for. Lack of internal controls and procedures. So we have the internal audits. It's good to always engage even an external auditor to come and conduct an internal audit for you if you don't have the internal audit department in your company. So it's necessary to review the internal controls and the procedures, the policies that you have set, and see whether there is compliance or whether there are risks that the company is facing. So it's good to engage internal auditors for that. Filing nil return when you have business income or operation. So make sure whenever you're filing a nil return, you are 100% compliant. You don't have any income to declare, you don't have any operation. Because at the end of the day, if you're continuously filing a nil return, KRA will come to audit you to verify whether that's the correct performance of the business. Not buying from a VAT registered company. We said under the VAT that you need to be buying from VAT registered person so that you can claim that input tax and it will reduce the tax liability for the VAT. So if you buy from just anybody who is not registered for the VAT, at the end of the month, you'll be having a higher VAT liability to pay to KRA. Not paying installment taxes. So we are supposed to be paying installment taxes. We have 4 different installments. The first one should be paid on June, September, and December. So the different 4 installment taxes, make sure you have computed the installment tax basing on last year's performance or even the current year. Maybe last year you made a loss. You are doing the management accounts for your company. You can be able to forecast the performance of the company for that year. Ensure that you have paid installment taxes to avoid penalties at the end of the year. The other mistake is combining multiple sources of income. So we have different categories. We have the business, rental, interest income, and any other income that you may be having. You're supposed to declare those income separately. If you have rental income for commercial property, make sure that you have declared that rental income separately and claim the expenses that were incurred for that business. When it comes to the other business, do the same, declare the income from that business and the expenses that were associated. We also have farming. You should also separate from the business income and the interest income. Probably from the bank, you receive an interest income. You should also account for that separately. We can check on the current or ongoing audits from KRA. So number one, we have the VAT withholding. So this is whereby those are withholding agents that have been appointed by KRA. They are not doing the withholding as expected. So KRA are doing those audits. So if you received a communication from KRA, you have been appointed as an agent, and you have not been doing that, you need to start doing that immediately, because they'll come to do an audit and they will demand the 2% of the purchases that you have made and penalties and interest on top of that. So that one will be too costly for your company. Then we have returns review. So those are the returns that we do, the self-assessment returns. So KRA, they would want to review that to see whether you have accurately declared the correct thing for the company. The income, is it the income that you have received? Is it the actual income? Are the expenses that you have claimed, are they actual? So that's what the returns review involves. Then we have the BAA. We have the additional assessment audits. So for the additional assessment audits, they basically focus on the income, whether there is an income that you have not declared, and even a purchase that you have claimed and not actual. So they will end up disallowing that or even adding the income, because this will appear from the VAT. For the VAT, we have the seller and the buyer. So when filing, you declare the sale, and the other party will claim the purchases. So if that information is not matching, it will lead to the additional assessment. We have the rental assessment, that is for the rental income. So we said if you have a rental property, make sure that you file the monthly rental income for the residential. If it's a commercial, declare that in the VAT and also at the end of the year. The expenses assessment, so the expenses that we are claiming, are they supported? Are they valid? Were they incurred for the purpose of that business? So it's good that each an expense that you claim, it has a support document, and also it was incurred for the purpose of the business. We have the VAT credits. So for the whole year, you're having a credit. You are in a VAT credit position. That one is a trigger, and KRA are doing audits basing on that. They want to verify the income in the purchases. They will request for the bank statement to even see the income that you have received against the income that you have declared in the VAT. So if you are in a VAT credit position, it's also good to take note of that and ensure that's the actual position of the company. All the sales need to be declared and even the purchases. Comparison between turnovers in income tax return and VAT returns. We have said that those two incomes, they need to tally. Whatever you have in the VAT as your income for the year should be the same in the corporation tax. So if there is variance, that one is also an issue. Advance tax on commercial motor vehicles. So you declare that you have motor vehicles in your balance sheet, but you have not been paying the advance tax. So ensure that if you have motor vehicles, pay taxes on them. Then we have import and export information. So the records that they have in the import declaration and even the exports, it will also be used to do the audits to confirm whether the returns that you have declared, they are actual. Have you fully declared the income or even the purchases that you have done, you have claimed, are they actual? We have rental audit based on KPLC and water meter information. So that one is also another trigger when it comes to rental assessment. They use the record from KPLC and the water records to see and analyze the rental income that you have declared. Is it tallying with these utility records or the utility payments that you have done? Nil filers and non-filers. So you have different obligations, but you have been filing a nil return. That one is also another audit that is ongoing. They want to see why you have been limiting a nil return, yet you applied for that obligation. Also for the non-filers, you have not been filing your returns. That one is also another audit. So if you don't have any income to declare, maybe at a certain month, you need to do a nil return. Don't just leave it without filing because you don't have anything to declare. Do a nil return. So the nil filers and non-filers, mostly the nil filers, ensure that that's the actual position of the company because it will trigger an audit. And in case you fail to declare maybe an income, they will charge you the taxes involved. Not having pay obligation, yet you're having salary as an expense. So you say that it is mandatory if you have employees and you're paying them salaries, make sure that you have the pay obligation. Even if there is no tax that is resulting from that, make sure that you have that tax filed, because at the end of the year, it will support the salary and wages expense that you have claimed. Tax investigation or evasion. Yeah, the taxpayers are evading to pay tax, so that one is also ongoing. What are the actions to take during an audit? So KRA, they have approached you for an audit for the past 5 years. So what are the actions that you need to take? So number one, you need to understand the time frame given by KRA. So if you have ever received that data from KRA, you've seen they always give 7 days or 14 days for you to respond. So make sure that you understand the time frame given and respond promptly. Even if you need to be added time, maybe to gather the document they have requested, respond immediately and request for time addition. Evaluate the information required by KRA. So they have requested for the ledgers, the bank statement, or the loan statement. First, you need to evaluate and see the tax position you are in. When you submit those documents, are you having any tax implication from those records? So it's good first to do. You engage even a tax professional. For that, they do that review and determine the tax position you are in before you hand over to KRA. Carry out a pre-audit compliance check. Then have an opening meeting with KRA team. That one is very necessary, so that you can be in a position to understand that this audit, what are they trying to achieve from this? So it's good to present yourself and your tax agent to KRA for a meeting and understand whatever they are trying to achieve through that audit. Assign a contact person from your finance team to be the contact person. So whenever KRA communicates to you during an audit, it's not everybody who should be responding to them. The response should be coming from one person from your finance team, should be responsible to be handling the KRA issues to avoid giving contradicting information to them. Then resolve as many issues as possible during the audit process and ensure you receive an official letter of findings from KRA. So this one is necessary so that maybe after 1 year you receive another audit concerning the same period that was audited. So with the letter of finding, it's very necessary because it will be used to close that audit and avoid a different audit in a different time, the same audit. Then the last one is paying any taxes which are not in dispute. So from the audit, the different discussion or engagement, maybe it will result to paying of taxes. After you have finalized with KRA and you have taxes that are not in dispute that need to be paid, you should come up with a payment plan with them to ensure that you pay on time and remain compliant. So those are the actions that you need to take. So the other aspect is resolving tax disputes. And this one is in relation to the tax audits from KRA. So a dispute, it begins at the issuance of a tax decision by KRA. So after they have issued a letter, they want to audit you. So they request for information and they do their own assessment. Then they send to you their findings from that. and there is a decision. Maybe they find that you have not declared returns. You have not declared sale worth 20 million. So their decision will be to charge tax on that 20 million, and they send to you that tax decision. So the next after that, after you have received that decision from KRA, you are allowed to object to the commissioner within 60 days. So they have sent a tax decision. You need to pay 20 million to them. But from your own analysis, that one is not in order. So you are allowed to object. That decision is not okay within 60 days. Once you have done the objection, they can accept that or not. If you're not satisfied with the decision, you can appeal to the tax appeal tribunal. Also, from the tax appeal tribunal, you have a right to appeal to the High Court if dissatisfied by the decision the tax appeal tribunal will make. So after the different engagements in the tribunal, they'll come up with their own decision. If you are not satisfied, you can move to the High Court, or rather you can use an ADR mechanism. That's an alternative dispute resolution mechanism. So that's how you solve the tax disputes. So, and that's the demonstration of the KRA audit process. Whatever we have explained. So the first is the notice of intention to audit. So you receive that letter from KRA. Once you have provided them with the documents required, they will do their own audits. Then the tax demand is issued on instance of non-compliance, if any. And if you're not satisfied with that tax demand, you object. After the objection within the 60 days that I've said, KRA will either accept that objection or reject the objection, and they will give their basis as to why they have rejected the objection. After that objection, you need to issue a notice of appeal to the TAT, that is the Tax Appeal Tribunal. And at the Tax Appeal Tribunal, you need to provide the documents to them so that they can do their verification and issue their tax decision. So at the Tax Appeal Tribunal, if you are not satisfied, you can appeal to the High Court, or instead of going to the High Court, you can use the alternative dispute resolution. So the thing to note with the tax audit appeal process, there are timelines which are given, and they should be taken very seriously, because if you are within time, maybe you want to object and the time has elapsed, already you cannot go ahead. KRA will reject your objection. So it's good to take note of the timelines that are given and act within the given timelines. I think our last item will be checking on the Finance Act 2025. I believe we have come across the Finance Act. And we have some of the emerging issues from that Act 2025. So number one, the per diem limit, it has increased from 2,000 to 10,000 per day. So initially the per diem was 2,000. So that one is not taxable. But now from the Finance Act, it has moved to 10,000 per day. Then under the capital gain tax, only licensed entity in the special economic zones are CGT exempt. So we have a transfer of property to a family-owned company where the transferor is a sole shareholder. It's also a CGT exempt. We have talked about the CGT tax, so it's good to note the changes that are coming up from the Act. Another issue is on the construction cost on sport facility on public grounds. They are now tax deductible. So any cost that has been incurred, it can be deducted. It's allowable when computing the tax. We also have another one regarding the VAT. So initially we talked about the three different categories of the VAT, the rates. So initially some of the goods that were exempt, now they have been moved to standard rated. And we say that for the exempt, they are completely not charged to tax, but not the standard rate, it's at 16%. So you can see the difference. That category, initially you are paying zero tax, but now you'll be paying 16% on that. So we have examples. We have inputs for geothermal, oil and mining prospecting, textile raw materials, disk and smart card used in the healthcare services. So you can see the different sectors which have been affected. We also have VAT exemptions introduced on different items. We have the mosquito repellents. The final product has been exempted from VAT. Inputs, raw material and machinery used in the production of the mosquito repellents upon arrival. Upon approval, they have also been exempted from VAT. Services supplied to mosquito repellent manufacturers upon approval, they are also exempted. So initially they were taxed, but from the Finance Act, they have been VAT exempted. We also have the VAT refund on bad debts. The window for claiming that refund has reduced from 3 years to 2 years. So it will be easier to recover the tax from the suppliers. So for the VAT refunds on the bad debts, specifically the timelines were 3 years, but now it has moved to 2 years. So if you have those bad debts and you had already paid taxes on those transactions, you need to apply for a refund from KRA. The other one, we have fringe benefit tax rate. Currently, it is set at 8% for employer-provided loans or benefits for the month of July, August, and September. So the fringe benefit tax, it happens when your employer has provided you tax has provided you loan at a lower interest rate than the current market rate. Assume the rate is at 10, the employer has given you a loan at an interest of 5. So there is that benefit of 5%. You could have paid a higher interest if you acquired the loan from a financing institution, but now employer has given you at a lower rate. So that benefit should be charged 8%. That is a fringe benefit tax, and it is done together with the pay-as-you-earn. So when filing the pay-as-you-earn, if you have your employees that you have given loans to them, make sure you also consider the fringe benefit tax. We have the deemed interest rate, also is at 8% for intercompany loans and related party transactions of the and it is contained in section 16, subsection 2J of the Income Tax Act. So if you're getting loan from a related party or intercompany, we have the deemed interest rate to be charged at 8%. We have low interest benefit rate set at 9% for employer loans for July to December 2025. Then we have the withholding tax at 15%. It should be applied on deemed interest amounts and debited within 5 working days. So we have talked about the deemed interest rate at 8%. So that interest that you pay on that intercompany loan or related party transaction, you need to subject it to withholding tax at 15%, and it should be paid within 5 days from the point of payment. And that brings us to the end of that presentation. So we can just hold briefly. We also have a demonstration for My Accurate Book software. But before then, we can go through the different activities that we have. So we have a Skill Up Mentorship program, which will be happening tomorrow, that is 19th, from 10 a.m. to 12 p.m. at Thika Road Technical College, opposite PCA Church, Ndarugo. So we always host this Skill Up Mentorship program. So tomorrow we will be having that one on 19th July 2025 from 10 to 12. We'll be having a customer service and customer retention program. And the training will be happening there. There'll be no charges. It is a free program to empower people. Then we have another webinar that will be happening on 25th July from 10 to 12 p.m. Understanding KRA audits, the what, why, and how. So during that webinar, you're going to cover the triggers on KRA audit, documents to check, steps, and how to stay compliant. So that one will be an online webinar, 25th July from 10 to 12. We have a CEO breakfast meeting. It will be involving the taxation in manufacturing sector. If you are in that sector, the manufacturing sector, you're very welcome. It will be held on 21st August. It is a physical breakfast meeting. It will be held at Swiss Renana Mount Hotel, starting 9 a.m. to 12. So mark the date from 21st August from 9 to 12. And the charges are just 3,000. So if you are in that sector, the manufacturing sector, you can register, book with us to attend that breakfast meeting. We also have our calendar for the masterclass, 2025 masterclass. Currently, we have a taxation masterclass, which is ongoing. It started on 14th to 25th July. So we have just done it for 4 days. So it's still ongoing, and it is being done online from 7 p.m. to 9 p.m. The charges we are having 25. So if you want to be part of that masterclass, you can join us for the remaining 1 week. Be free to contact us and have that engagement done, probably on the charges, because 1 week is already done. The next masterclass will be on 8th to 19th. It will be a 2 weeks masterclass for the audit and bookkeeping masterclass. The charges will be 15,000. So 1 week will be for the audit masterclass. The other week will be for bookkeeping. Both will be happening online from 7 to 9 p.m. Then on November 2025, from date 10 to 21st, we'll be having a 2 weeks taxation masterclass, which will be going for 25,000. So you can organize and contact us for early booking for those masterclass. That's the calendar that we have for the remaining part of the year. So about LWK Africa, we deal with bookkeeping. We have the different services under bookkeeping. So in case you are interested with any, you can contact us and have a proper arrangement. We always do internal audits. We do a quarterly review on the accounting system, the bank reconciliation. We check on the internal control processes, payroll review, tax health check. So in case you are interested with any of the services, you can contact us. We also have our tax services, which involve the tax returns, tax health check, tax refund. If you want to do a refund and you don't know how to go about it, you can come to us. We also have KRA representation during the KRA audit, and we also do tax advisory and tax training. We have an offer which is ongoing, a special offer for the tax health check. Currently, we are giving that offer at 20,000. We will do a tax compliance check. That's what we refer to a health check for the past 2 years, and check on your taxes and provide recommendations on the tax position that you are in. So you can take that chance and talk to us on the tax health check. Now we have the My Accurate books. That's a software. We're going to have a demonstration in the next probably 5 minutes. So just be patient. And we have our director there, Madam Regina, who she is, and our location. So in case you are new to us, this is the first time that you are new for the webinar. We are located at Westlands, Dada Residence, Gate 83 along Westlands Road. And we have our tail number there and our email. So in case of any service that you would want to get from us or any consultation, be free to contact us and get any assistance. So I hope you have received responses for the questions that we have asked in the chat box. And the webinar, I hope it was impactful and you have learned something. So as we prepare to have the demonstration for My Accurate books, so you can still go on with asking any question that you have as we go on with the presentation. So we can just take on few questions before my colleague John sets up for the demonstration. And also take notes to, there is a link in the chat box where you can book a consultation with us. So if you have any consultation, fill in that link and we'll be in a position to attend to you. So thank you very much for being together with me in that webinar. So we just hold on, we have the accurate demonstration.
Thank you very much, Mary, for such a wonderful presentation. One highlight that I got is that, where is that? There's a highlight I got on failure. Failure to keep records. And what comes about when you fail to keep records. Because sometimes KRA might be knocking at your door, and if they are not as you reported. Oh, there's a question from Isaiah. Isaiah, if you're able to type your question, we would be thrilled to respond. So, ladies and gentlemen, my name is John Kashoka, and I'll take 5 or 7 of your minutes to go through my Accurate Books, which is an accounting software that has been developed by LWK Africa. And the big assignment or the big objective of this system is to work with businesses, basically work with you, so that where you were getting penalized, we save you from being penalized because your record in the right state. And maybe before we even jump into it, I would want to jog your mind for a second. Just type one word that describes your Friday. Just one word that describes your Friday. In the next 5 seconds, just type one word that describes your Friday. I would want you to get a feeling of how you're feeling as I now share my screen. All right, I can see. Nice. Hilda says her day is chilled. Patrick, awesome. Hey, Saruni, I see it's wonderful, insightful. That is good to hear. That is good to know. Kenneth, Nancy, to get an appointment. Can you be able to opt out? Yes, how do you do that? I believe Mary will be in a position to respond that as soon as we are through with this one. Thank you, Wafula. I see you are commending Mary for a wonderful job done. Oh, magnificent, Hillary. I see Pia is fantastic. Jogu, amazing. Wow. I can see I'm dealing with an energetic group. So without waste of a second, I'll just share a presentation for the next 5 minutes of what my Accurate Books is. I know we've had a conversation with some of you, if not all of you. And at the end of it, my team, my co-host, will be sharing a link because we would want to follow up with you and because there is a lot of improvement that the system has undergone. You would be surprised that as we speak today, now the system has branches where if you're running a business and it has branches, you're in a position to get to see what is happening in the other branch and run it. The branch can have an account independently. The other aspect of the system is that we now have live my accurate pay, where you can make transactions in a whisker. So this journey, we've achieved the much that we've achieved as my accurate books because of people like you, people, the over 700 now users, active users who paid up and are using the system based on their recommendation. We are able to review, and up to this far, we've really made big strides because of inputs from people like you. So I'm happy to share my screen. So as I said, my name is John. I'm part of customer success and customer happiness when it comes to my accurate books. So I'm happy to make this presentation. And a brief background. I know Mary talked about Skill Up Mentorship Program. In fact, this system is as a result of Skill Up Mentorship Program. So that tells you that that program is so dear to us in as much as it is our CSR program, which is all us. And we believe that as we empower entrepreneurs and to be entrepreneurs, we also need to empower them when it comes to management of their business. So part of the team members who've been involved in development of my accurate books, in fact, Mary is one of them. We have other accountants and auditors who helped us, and of course, software developers who helped us come up with this amazing software that can save you from many problems when it comes to business management and business financial management. And you might be asking yourself, who benefits from this system? I have a list of many people who can benefit out of it. Among them is accountants, clinical and medical practitioners, boutiques, hardwares, mini supermarkets and dukas, agrovets, salons and barbershop, car washes, cleaning services, plumbing and electrical businesses, repair businesses, graphic and web designers and developers, consultants. You might be a consultant and wondering, how can I manage my business? My accurate books system is able to help you in that. So does for coaches and trainers. If you're a content creator and influencer, maybe you talk about accounting and you want to manage how your money is coming in from content creation, my accurate books will help you manage that. If you're in the border business and you would want to see how you're making money, my accurate books will help you in doing that. So is couriers and delivery services. The system is made in a way that it can support such. When it comes to marketing agencies, IT firms and developers, event planners, smallholder farms, poultry and dairy farmers, cafes, small restaurants, catering businesses, Airbnb hosts, law firms, and even those in the small cottage industries. My accurate books can help you in managing that. So is restaurants and hotels. Now, you might be asking yourself, what are some of the key features that are in the system? One of them is that there is the point of sale. You are able to generate receipts. You are able to even generate invoices and quotation. There is within the system, you can manage your customer information. You can also manage your inventory with the e-wallet. With the e-wallet, that is my integrate payment, where you can even prompt your clients to make payments to your business. Multi-user access, where you as the administrator can distribute roles to your staff, whether it's a salesperson or it's a cashier or it's an accountant. Basically, anyone who is involved in your business and you would want to get them or an account within my accurate books. That is enabled in the system. You're able to manage petty cash. You're also able to manage payroll within the system. And the fact that apart from being accessible from the web, you can also access it from Google Play Store, because we do have an application on Google Play Store that is My Accurate Books. And if you search for it, the icon that you see on my screen, this is what you're going to see as the icon on Google Play Store. When it comes to invoicing and quotation, you're able to do that within My Accurate Books. And so are you able to do expense tracking, because you're able to see your report on how your expenses is, basically how you're expending when it comes to your business. Key, you might be asking yourself, in a world of saturated systems, why My Accurate Books? And I want to tell you, here is the catch of why My Accurate Books would be ideal to your prospect, or to you or people that have businesses and you're in a position to refer. One of them is that we won't ask you whether you have CPAK. We won't ask you whether you have a diploma in accounting. All you need can an Android phone. Can you operate an Android phone? Just with that skill, you can be in a position to operate My Accurate Books. The other bit is that you're able to save on time, because things that you would write on paper, things that maybe you would have to write at the back of your mind, you won't have to do that, because the system will consolidate all that on your behalf. Secondly, or thirdly, it will My Accurate Books improve on your accuracy, because the information that you feed in is what is kept in the system. With all these, you are able to boost your decision making, because if your expenses are more than your income, you are able to sit back and ask yourself, what can I reduce on when it comes to expenses, so that I bridge the gap of revenue or income that I get and the money out. And also when it comes to stocking. In addition, My Accurate Books basically grows with you. As you're going to see, is that when it comes to subscription, it is way below what other service providers, or basically other service providers, charge you or ask you to pay. Because we believe that even with a small charge, the fact that we are able to share this experience as a business person, that is our happiness. When it comes to compliance, you had a wonderful discussion earlier with Mary, and one of the things that for me the highlight was penalties, things that come about because your records are not in good shape. So My Accurate Books helps you improve on that, so that when you want to from a financial institution account and send them to the bank or to the SACCO or to any other financial institution, and you get a facility to basically boost your business. If it is from Kenya Revenue Authority, you are able to save yourself from penalties or charges that people. Now there is the aspect where you can create, there is user management, where you can give some aspect of the system or some features of the system or rights to the system. You are able to enhance collaboration in that the team is able to see progress, whether they are doing it remotely or they are doing it from a shop. They are able to see how the business is performing. For you as an administrator, it doesn't stop you from doing other things if you have a team member or team members, because even while you are remote or you're far from the shop, you can see how your business is performing. When it comes to customer experience, with your database where you have your customer information. You are able to follow up how your service was, what their recommendation is. If there are any complaints, you are able to respond to them on a timely basis. And the fact that all your financial data is centralized, you are able to tell, basically you're able to tell how you are doing insofar as sales are concerned. You can tell which is your fast moving product. For those with products that have timelines, you're able to tell which is your dead stock, so that, again, when it comes to stocking, you do it right. And with our support team, when you have an issue in regards to the system, our support team responds on timely basis to ensure that your problem is diagnosed and dealt with on a timely manner. Again, the fact that the system is optimized for mobiles or low environment means that whether you are in Baragoi or you are in a place where network is not as strong, you can still access the system. So this is not for businesses within Nairobi or Nairobi Metropolitan. We have clientele even from the edges of the borders of this nation. And therefore, anyone within Kenya, within East Africa can use this system. When it comes to exporting of data and reports, you can do that within the system, either downloading a PDF document or an Excel that from the system. There is also, this also supports, the system supports local banks and integrations. As I mentioned, with my Accurate Pay, you are able to integrate pay or towards your business. The system, again, is clean with intuitive interface and with minimal jargons. As I mentioned, the fact that we built it for anyone who has knowledge, or they can use a PC or an Android phone, we have made our language or the system language as easy as it can get, so that anyone with basic knowledge can be in a position to use this system. Again, the system is, we do give personalized assistance compared to other large platforms. There is no chatbot. If you call in or if you reach out, you will get response from a team member within time or at the earliest opportunity. That is almost within 12 working hours, if by any chance the response is not on a timely basis. So with all this, as a business person, you get peace of mind, and now your focus is on widening the profit margins, because everything else has been taken care of by my Accurate books. Now, the team behind my Accurate books created it, or we did build this system because we believe that running a business is hard enough. Whether you are in consulting, whether you are running an agrovet, or whether you are formulating animal feeds, or even you are just a freelance accountant, we believe that is hard enough, and therefore your accounting software shouldn't make it harder or more expensive. And my Accurate books is able to focus with maximizing on profits or maximizing on revenue. And when it comes to the cost, can you imagine just using my Accurate book for a month, you'll only pay Kenya shillings 500 only. I won't ask about others. If, for example, you subscribe for a quarterly payment package, you will only pay 1,400 shillings only. If you decide to do annually, you only pay 5,500 shillings only. And remember, we are already giving you 14 days free trial, so that you're able to familiarize with the system, and again, you're able to even key in information or stocks or even services that you offer within the 14 days. And further, when it comes to to my accurate books or to this system, we make sure that everything is extremely simplified so that, again, you focus with making more or widening your profit or your revenue margin. And if you're paying for 1 year, or if we already give you a whole month for free. Instead of paying 6,000, you pay 5,500 shillings only. So how can you get to us? I know my co-host will be sharing or is sharing a form where you are able, because we do give demonstration on a daily basis. In fact, apart from the clients who we gain from Skill Up, we've also gained clients from these webinars, people who attend and they for demonstration, we conduct demonstration, and that has grown spontaneously, because I can tell you between January, we've got numbers of, in fact, last Saturday we were talking of around 572. Today, as we train, around 711 paid users out of almost 2,000 people who've created accounts under accurate book. Would you want to be the person who gamble when it comes to managing the accounts and business, or would you want to be the person or to join the family that is now happily using my accurate books and being now able to give accurate reports, able to integrate their payments, and even able to extract and give receipts to their customers and invoices that are, what I would say, top notch, because we've invested so much to make it outstanding. So, ladies and gentlemen, if you want to get to us, we are on Facebook, we are on Instagram, we are on X, we are on LinkedIn. You can do DM us on WhatsApp, you can call us, and you can also access our website or visit us on the Dar Resident Gate 83, Westlands Road, Westlands. And finally, I would wish to thank you for sparing time to hear about this amazing system. And I want to open now this floor for question and answers. And as we do that, feel free to also fill that demo form. We are happy to conduct demos or to schedule demos. We will have a conversation and take you through the system step by step until you understand it, and in a way that you can train someone else to use it, or in a way that you can even make money out of it. By the way, we do have a freelancer program. Even before we go to the question and answers, we do have a freelancer program, and as you fill the form, on Tuesday we are going to have a training. That is Tuesday between 10 and 12 a.m. And what we are giving away as commission, I can tell you that you will not get it from any other service provider that give commission, because you can imagine this is just a tip of the iceberg. If your customer, if you go talk to a customer, in fact, even if it is yourself, and you sign up under our freelancer program, and you create an account and pay monthly, we say it's 500 shillings. Out of the 500 shillings, you're going to make 250 shillings. Now, have you ever had such a deal anywhere, from basically anywhere? If your client or yourself subscribes and you're still under our freelancer program for quarterly package, you will get, out of the 1,400, you're going to get 750 shillings. If you subscribe annually, or you talk to someone and they subscribe annually, you are going to make 1,000 shillings out of the payment that they're going to make of 5,500 shillings. I believe this is a deal that you cannot get anywhere else. So if you want to know more about this engagement, we will have a virtual training on Tuesday between 10 and 12 noon, and share your contact, basically your email address and phone number, and we will share a link in that regard. You may know of someone who is saying they are not making a living, and they are feeling that they are not in a position to make a living. Share information about this. They can contact us on the number that I've just shown you. That is 0116 333 000. They can DM us, or you can even share their details, and we will be in a position to engage them and share that link so that they can participate on Tuesday. At this point, without waste of a second, I'm happy to respond to questions insofar as my accurate books is concerned. Thank you very much. So Wafula, my accurate books per month is 500 shillings only. Subscription is 500 shillings only. So we could further this conversation if you're able to fill the form. I'm happy to take it up with you as soon as we are through with this webinar. So I see there's a question from Jeff. Can one operate accurate books at 2 points, i.e. business is at Meru, but also check operations in Nairobi also? Absolutely. Now with the branch, you are able to do that as an administrator of that account. You can see how the different branches are operating from one